Something is happening inside the US dollar system, and it's unfolding in a way that almost no one in power wants to acknowledge. You won't hear this in a press conference from the Federal Reserve. You won't hear it in a Treasury briefing. And you certainly won't hear it from politicians heading into an election year. What's happening right now isn't dramatic enough to grab headlines, but it's far more dangerous than anything loud or obvious. It's quiet, it's structural, and it's accelerating beneath the surface with a kind of mathematical certainty that nobody can stop, not even the United States government itself. The truth is that the US dollar, for all its strength, for all its dominance, for all the history behind it, is entering a period of fragility that Americans simply haven't seen in decades. And the most alarming part is that the decline isn't coming from one single event. It's coming from a combination of slow-moving forces that are converging at the same time. Forces that normally wouldn't matter on their own, but together they create the kind of long-term pressure that reshapes the future of global power. For more than 70 years, the dollar has been the center of the world economy. Countries trade in dollars. They save in dollars. They borrow in dollars. They price oil, metals, food, and technology in dollars. The entire global financial system runs on dollar fuel. And because of that, the United States has been able to borrow at extremely low cost, run massive deficits, and maintain influence in every corner of the planet. But systems like that don't stay perfect forever. They evolve, they weaken, they adapt. And when weak points begin to appear, especially in something as foundational as the US dollar system, those weak points matter more than people realize. Take the US bond market. This is the backbone of the dollar. Every mortgage, every loan, every business investment, every government program is connected in some way to the stability of US bonds. But over the last 2 years, something unprecedented has happened. The United States needs to issue more debt than ever before, over $2 trillion a year and rising, but the world is buying less of it. China is reducing holdings. Japan is slowly stepping back. European buyers aren't coming in the way they used to. Even American banks, once reliable buyers, are now reluctant because high interest rates have damaged their balance sheets. That leaves the Federal Reserve. And every time the Fed becomes the buyer of last resort, inflation pressure rises. We saw it in 2020. We saw it in 2021. And if the US is forced into that position again, the consequences will be the same, only worse. But the real danger is not just about debt. It's about trust. Reserve currencies don't collapse because people run out of money. They collapse because people run out of confidence. When the world stops believing that the US can manage its finances, maintain its fiscal discipline, or control inflation, the dollar loses the very foundation that keeps it dominant. And right now, trust is quietly eroding. Not dramatically, not overnight, but steadily. Look at global reserve data. In the early 2000s, more than 70% of the world's reserves were held in dollars. Today, the number has fallen to around 55%, and it continues to trend downward. Again, this is not a collapse. It's a shift. But shifts like this matter, because reserve status is not about a single decision. It's about long-term direction, and the direction is changing. Meanwhile, emerging markets, energy producers, and even some long-time US allies are exploring alternative systems. Not because they want the dollar to fail, but because they're preparing for a world where it no longer dominates everything. And when enough countries start preparing for a future without dollar dominance, the future begins to change. This shift becomes even more dangerous when combined with inflation. Americans can feel something is wrong, even when official numbers suggest stability. Prices haven't gone down. They've simply risen more slowly. The cost of basics, food, housing, insurance, transportation has settled at levels that strain households across the country. People are paying more but earning less in real terms, and inflation's long-term impact is becoming permanent. It is reshaping the standard of living in ways that Americans are only starting to understand. Inflation weakens the dollar from within. It erodes the purchasing power of savings. It burdens businesses. It pressures wages. And once inflation becomes embedded, it is incredibly difficult to reverse without causing widespread economic pain. The last time the US faced a similar situation, interest rates had to be pushed above 15%, triggering a recession. And today, with debt levels far higher than they were back then, even moderate increases in rates create enormous strain. Then there is geopolitics, the wildcard the dollar system was never designed to handle. Rising tensions between the US and China, growing alliances outside the Western world, energy deals conducted without the dollar, and a global landscape fractured by sanctions and competing interests. All of these weaken dollar stability. Sanctions have unintended consequences. When the US weaponizes the dollar, other countries look for ways to reduce reliance on it. Not because they can replace it immediately, but because they cannot afford to be vulnerable to American financial pressure forever. And when global trade begins to move even slightly away from the dollar, the long-term impact is profound. It changes how countries structure their economies. It changes how global markets react to US policy, and it changes the balance of power in ways that will not be felt for years, but are already beginning to take shape. This is the real danger of the dollar crisis. It's not a sudden collapse. It's a slow erosion. An erosion of trust, an erosion of purchasing power, an erosion of global influence, a weakening of the foundations that supported the American-led system for decades. The crisis is not about whether the dollar disappears. It won't. The crisis is about what the dollar becomes when its dominance fades. A strong currency can exist without being the world's only currency, but the transition from one role to the other is always turbulent. It brings higher borrowing costs, less global leverage, more inflation risk, and more instability. The dollar crisis is not the end of the United States, but it is the end of a specific era of effortless dominance, limitless borrowing, and global certainty. Americans are entering a new chapter, one where economic power is more contested, more complex, and more fragile. And the hardest truth is this: the crisis has already begun, quietly, slowly, and long before most people realize it. Asterisk, asterisk. This is Global Collapse Report. Subscribe for clear, data-driven analysis that cuts through the noise. The next phase is coming, and you need to know what happens before the rest of the world wakes up.